So you are an audit manager in the firm with a small team dedicated to forensic investigations. You have been approached by the finance director of SL company to perform investigation into a fraud perpetrated by the purchase ledger clerk. You have ascertained the following. The fraud came into light after another employee mentioned to the activities of the purchase ledger clerk, Sam Seal. Initial investigation have identified that Sam had been paying money into his own bank account by raising false invoices and paying them through SL's purchase ledger. The fraud had gone undetected for unknown amount of time because SL's controls only require invoice excess $1,000 to be authorized by a senior member of staff. If invoices below the amount are purchased and authorized by a payment by the relevant purchase ledger clerk. SL is very large company with revenue in excess of 100 million and operates in construction industry. Sam Seal joined the finance department 9 months ago and has since been suspended from duties pending this investigation. The finance director has requested that your firm perform such procedures as necessary to quantify the extent of the loss suffered by the business. In the context of ACCA's fundamental ethical principles, what factors should you take into account before accepting this engagement? Assuming you accept the engagement, what specific procedures you would perform to allow you to quantify the loss suffered by SL company? So this is a company with a fraud. So there are certain risks that is attached before we accept this client. Because when it comes to the ethical principles, so they are asking us to write in context of ACCA's fundamental ethical principles. What are the ACCA's fundamental ethical principles? Integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. So the moment you hear ACCA's fundamental ethical principles in a requirement, you should think about these 5 points. So we are required to write what are the factors we might consider in context of ACCA's fundamental ethical principles before we accept this engagement. That is what is the requirement. So when it comes to integrity, what all factors do we consider? What are the risks involved when it comes to compromising our integrity? If suppose, let us say the senior staff is also involved in this case. So if senior staff is involved, then we might, our own integrity, because our auditors or our employees might get compromised, right? They might also get compromised because their integrity can also be questioned. So hence, if there is a risk that our own integrity could be compromised, we should not accept the client. Second is objectivity. If there are cases where this particular fraud situation comes to a court case where the company is now filing a case against the staff, right? Filing a case against the staff, or the staff is filing a case against the company, then if we are called as an expert evidence, then there could be certain independence issues that we learned very recently, right? So we might have to seek to provide evidence independently regardless of the interest of the client. Like we have to be a witness of fact but not a witness of expert. The third is professional competence and due care. So as with the engagement, we should consider our ability to perform with utmost level of expertise and competence. Our firm, if it has a forensic department, then it is likely that they have performed similar engagements. We should note that the company is a construction company and we should carefully consider whether we have sufficient knowledge of the business and industry to perform the investigation. So we need to think about whether we have enough knowledge and have we performed such investigations before. Is something that we need to think about when it comes to professional competence and due care. With confidentiality, it is utmost understood that we should carry on the duty with utmost confidentiality. However, this could be overturned if the case comes to the court. In that case, we need to abide by the rules of the court and provide all the necessary evidence to the court. However, if since it's a sensitive investigation, we should discuss the levels of secrecy required, and what kind of evidences we might have to submit to the court of law. And finally, in case of professional behavior, there is a chance that this case could enter the public domain. So we could factor into a high profile client or high profile engagement. In that case, we might have to act in a professional manner and should not do anything that would bring our profession into dispute, specifically if you are called for an expert witness. So let me just write down the pointers for you for this particular solution. Whatever I've explained, I'm just gonna write it as a pointer. So the first one is integrity. So in case of integrity, there is significant risk. Okay, significant risk if our own integrity could be compromised if senior members are involved with the case. Okay. Second is objectivity. Okay, in this case, and then if that's the case, then we should not accept the client. Second is objectivity. So we can be called as a witness if this fraud comes to the court. So in that case, we need to act as a witness of fact and not witness of expert. The third one is professional competence and due care. Professional competence and due care. In this case, we have to act with sufficient knowledge. We should carefully consider. So consider if we have sufficient knowledge and if we have sufficient knowledge of the industry to perform this investigation. Okay. The next one is confidentiality. So confidentiality is since it's a sensitive investigation, so since it is a sensitive part or it's a sensitive investigation, okay, since it's a sensitive investigation, it's very important that we should discuss the levels of secrecy, and also to that we will have to carry the duty to the court of law, if we are called as witness. So we should be careful that we have a duty to the court of law. If at all we have called as a witness, then these are the things that we need to follow. And finally, professional behavior. So when it comes to professional behavior, we need to ensure that we should not do anything that brings our firm to dispute. So anything that should bring our firm to dispute, we need to ensure that we should not do it. Okay, so these are the examples of our ethical behavior. So the next question is, assume you accept the engagement, what specific procedure would you perform for to allow you to quantify the loss suffered? So when it comes to the forensic investigation, one of the primary evidences we collect is to do an inquiry. We need to inquire with the purchasing manager as to the contracts or jobs which Sam Seal dealt with the invoices. So that's the first thing. So when it comes to the procedures, the first thing that we are going to do is, okay, inquire. Okay, inquire with whom? With the if you look at here, see, he is part of the purchasing, right? Purchasing department. So we need to discuss with the purchasing manager, because any invoices which are above $1,000 has to be approved. So we need to inquire with the purchasing manager. Inquire with the purchasing manager as to the contracts / jobs Sam Seal was responsible for and the invoices he dealt with. Okay, this is the first one. Then we should look to perform certain analytical review. So we're gonna perform an analytical review for the purchases that Sam Seal wasn't involved, to see if there is any unusual items that we can identify. So second one is to perform analytical review. So to perform analytical review on purchases for contracts or jobs Sam was not involved with, to identify any unusual trends, or frauds indicating others involved. The third one is to inspection. So the next action will be inspection. So to inspect all the invoices which are below $1,000 and to see if the suppliers to invoices are under the approved list. Okay, if there are unusual suppliers, then they should be contacted to see if they are existing, and where suppliers cannot be verified, then the invoices should be considered as fraudulent. So inspect all invoices within or below $1,000 and review the suppliers of those invoices against approved list of suppliers. Okay, why are we doing this? Because if we are doing a transaction with a supplier which are approved, then there will be a process involved in approving a supplier. The purchase ledger would add a supplier and that will be approved by the manager, and the purchasing manager would know about those suppliers. But in purchasing invoices, this is how the fraud would happen. They will take any invoices below this below the supplier, and they would put any supplier's name, or they might not put any supplier's name, but rather they would put someone's name and transfer the money. So if we are able to know that these are suppliers, if the purchase ledger clerk are able to raise invoices or settle invoices only for those suppliers who are approved list, then the fraud could be minimized. Because he will not be able to process invoice for those suppliers without the suppliers getting approved. So any third party, he cannot process the invoice, but they have to get those suppliers approved first, only then he can process the invoice. Without approving the suppliers, they cannot process the invoice. So then control is there, the fraud is minimized. But if there is no approved list of suppliers, then still it's fine. Okay, if the company follows a case where they can buy it from any supplier, then still it's fine. You can contact the supplier and see if it actually exists and such invoice actually exists, so that we know that this Sam actually had paid to some suppliers, not himself. But even then we are unable to verify the supplier. There is no supplier at all, or the number that is given is fraudulent. Such supplier does not exist at all. Then the invoice should be fraudulent, because the risk that we are dealing with is existence of the supplier. Okay, existence of the supplier. So in this case, okay, to see if they are part of the approved list of supplier, or if supplier was there during prior year. Okay. Now unusual suppliers should be contacted for existence. They should be contacted for existence where they can't be verified, where supplier can't be verified. The invoices should be listed as fraudulent. Should be listed as fraud. Okay. And then you can perform an analytical review of all invoices that was dealt by Sam in excess of $1,000 and to see are there any unusual trends. But in this you can just perform an analytical review. You don't have to review everything above $1,000 because there is a control involved. Any invoices above the $1,000 are approved by someone senior. But still we are investigating them to see if there is some senior staff involved. So the next one is perform analytical review of all invoices above $1,000 to review any unusual trends or fluctuations can be identified. Okay, if there are unexplained, if any unexplained fluctuations could indicate a potential involvement of senior staff. So if the Sam had done the fraud along in collaboration with the senior, then they would have done the fraud for $1,000 invoices above $1,000 by collaborating with the senior. So the senior would have approved for certain invoices which are above $1,000 by by giving them all these things. Okay. So in this case, you can check. Okay. The fifth one is, so based on the analytical review, you can select sample. So select sample of invoices above $1,000. Select sample of invoices above 1,000 and ensure existence of supplies. Okay. So for after your analytical review, take samples above $1,000 and ensure whether those supplies exist or not. So as you carefully noted the answers, you would have noted that majority of the work was done with three perspectives. One is inquiring with the purchase manager relating to their process and involvement of SAM and how the controls were overridden to do such frauds, etc. Second, performing analytical reviews to identify any unusual changes or unusual trends. Like 1 month is it more invoices are being settled, another month it's less. How they are identifying them? Are there any unusual compared to the last year in case of the frauds? And the third one is inspection. And when you are inspecting, we are inspecting those invoices specifically to see the or review the existence of the supplier, because the SAM would have created fictitious suppliers and would have transferred the money to the fictitious supplier's bank account, which would be his bank account itself, and from the company's bank account to his bank account, creating a fictitious supplier and attaching his personal bank account to the fictitious supplier's name. And if the supplier was approved, then definitely the control is there. If it is not approved, the suppliers are not approved and they can settle invoices below a specific limit without any approval of the seniors, would cause for a lack of control. So how we are investigating all the invoices below $1,000, but for above $1,000 we are just doing a analytical review, because there is a senior staff who are approving those invoices above $1,000. But even then, if the senior staff is also involved, then it could potentially indicate an collaboration with the senior staff, and those invoices could be highly fraudulent, could be done along with the senior staff members. So for those cases, we perform the analytical review and then we are selecting a sample. But since for a invoices for less than $1,000, there's no control involved, we are investigating all the invoices to see if there are any undetected frauds. Like we have already detected a specific fraud, but are there further additional invoices which have not been detected yet?